All right. Good afternoon. Good morning, wherever you are in the world watching this and listening to this. I'm your host, Jaden Sterling. It's April 28th, 2025. Hope you're doing great. And let's dive in. So, we've got a mixed market today. The Dow, everything kind of moving sideways, no major definitive moves. We've got the NASDAQ down slightly less than 1%. The Dow. Crude oil down, silver up a bit today, as well as gold is up, and Bitcoin is off. FTSE 100 up. So like I mentioned, kind of a mixed bag today. But I wanted to, I've talked the last few weeks quite a bit about the equity markets and everything happening with trading that's affecting the markets, good or bad. But for the most part, extreme volatility. And that is, as far as I can see, here to stay. When we have a market that is digesting so much that's being thrown at it, for example, tariffs, unemployment numbers, and we also have to remember we have a market that is not accounting for a recession. And this is going to be an interesting next 3 to 4 months in the equity markets with the a recession looming over us. And, it's always, for us who have been aware of what is going on with the agenda and things like that, you can look at any financial numbers and pick the ones that give the narrative of what wants to be said. And the narrative has always been strong economy, inflation under control. Therefore, they stopped cutting rates in the U.S. They're continuing, I believe so, in Canada. We'll find out shortly. But the narrative is, a picture has been painted for us to believe that, yay, the market is so great and the economy is so great. When in reality, when you look at GDP, it only takes 2 quarters of declining GDP to create a recession, and none of that is being factored in by the equity markets. So if there's ever a wind or a hint of us going into recession, then that's going to have a big impact on the equity markets. Now, there's that part of it for us, for the market to digest and to figure out. And then there's you as the investor, asking yourself, how do I take advantage of this type of scenario within the marketplace? And the key is to not be fearful. That's so important as we look ahead as an investor, and as we look ahead at this market, is to understand the things that might be potential pitfalls. And, so how do you manage for that? You keep some cash set aside, very important. And then you also just hone in on, let's say, 6 to 8 different companies that you can become familiar with and comfortable with to trade on a regular basis. And when you start to notice the trading patterns of stocks, it's simple to take advantage of this market. All we need is continued volatility to make a lot of money in the equity markets. And the good news is we've got that. We've got the volatility to the upside, and we certainly have the volatility to the downside. So this market is requiring us to not be buy and hold investors, but more importantly, to be investors who are actively managing our investments. That's so important. So become someone who is actively looking at your investments. This is no longer a hide your head in the sand situation, ignoring what you have set aside, even in your 401k or RSP or IRA. This is a situation where you keep your head on a swivel. You're constantly navigating all the information that's thrown at you, and most importantly, doing your best to not be fearful, because the markets are based on investors' emotions. So as long as you're someone who is not fearful, as long as you're someone who says, you know what, I'm in this thing to win it, everything's going to work out just fine, then you can look at the stocks that you have, continue to sell covered calls against them to bring in income in the portfolio. I can't stress that enough. Super important to do. And, you know, if you're underwater in some stocks, then just look at selling out of the money calls, but don't put them too far out of the money, but just kind of gauge like 10 to 15% beyond where the stock is currently trading if you're selling a call on a Monday that expires on a Friday. So you can do these type of financial strategies to continue to bring cash flow into your portfolio, maintain some cash, set aside some cash, so that if there ever is a big dip, you can take advantage of that dip. All right, so I hope that's helpful for you. Let me know in the comments, you know, what you're currently doing to protect or hedge your portfolio. I'd love to hear it. And your thoughts on the equity markets. You know, do you think the market is going to keep trajectorying lower, or do you think the trajectory is going to change and go higher? I'd love to hear your comments on this. You know, just the fact that there's a flight to gold and to silver is always an indicator of uncertainty in the market. I've said this before, the market hates uncertainty. It's like just the worst thing that can take place for an equity market. And yet that's all we have in this environment is extreme uncertainty. So we just do our best to stay focused, keep your eye on the prize, stay in it to win it, and you know, look for opportunities. If you're, you know, in the midst of this, there are many stocks that are 30, 40, some are even 50% lower than they were early February. And that could be, if, you know, when you have a company where their market value is cut in half, that could be a potential buy opportunity for you. So I think it's, you know, maintain the course, maintain a level head through this process, and just know it's all going to work out just fine. That's really important, I think. So hope this is helpful. Just want to walk through, this is our demo account for SSP. So I want to walk through a couple of the changes that we've made recently for you based on your information that you've sent us, based on your recommendations. Thank you for that, by the way. Super helpful for us to we read all of the emails that come in, and we carefully consider all of the changes or recommendations that you all have, because the software is, after all, it's for you, right? So we've changed this. I want to talk about this portfolio assistant. If you haven't been here yet to the website, by the way, welcome to all our new subscribers who are coming in at a rapid rate. Thank you so much for joining us. We're happy to have you here. And of course, to our long-term supporters and members of the software, thank you for being here as well. So when you land on this page, Portfolio Assistant, there's two ways to get there. One, from the home screen, just click here. It's kind of a little like robot looking icon here. Click Portfolio Assistant, or through our, what we call our hamburger menu, the three dashes there, just go to Portfolio Assistant. And when you first arrive, you're going to end up at our risk assessment questionnaire. It's 13 questions, won't take you long, but walk through them and take your time, and up will pop your risk level. So you'll know how to, first of all, the software will become familiar with your risk level, and it'll know which companies to show you based on your risk tolerance level. So next, once that's complete, you head over to the Portfolio Assistant. Here's where you can add cash that is available. We call this parked cash holdings. This is extra cash, represents your parked cash or cash holdings, not represented by your cost basis entries, buys and sells. This is simply cash that you have set aside that you at some point will invest. You put that here. Easy to do, just click add the amount in, and up will pop. It'll add it to your cash holdings. It will include it in your entire portfolio. and then it will make recommendations based on your entire portfolio, cash plus stocks in your portfolio. So what you're seeing here is we're showing you your current sector weightings. These are all you have to do is hover over and you can see at a glance which percent of your portfolio is in which holdings. So this particular demo portfolio has 62.56 in healthcare, 18.6 in technology, 12.79 not applicable, got some in consumer cyclical, and a very small amount in consumer defense and in industrials and communication services. So based on the risk, so this is how this works. Based on your risk tolerance score, if you scored high, what we're showing you now is the NASDAQ 100 sector weighting, because the NASDAQ is a much more higher volatile index than, let's say, the Dow Jones. So here's what you're doing is you're getting a snapshot of the percentage in each of these categories. And these are, we really focus on the categories that are 12% or higher. So that's going to be healthcare, technology, consumer cyclical, industrials, and financials. And then it shows it on this wheel basis, percentage basis. But here's the key. This is how all of this works is now we make recommendations for you. And so here's the breakdown in terms of sector, the percentage of your portfolio versus the NASDAQ 100 percentage. So for example, this demo portfolio is very high in healthcare. It has 62.56% in healthcare, whereas the NASDAQ has a weighting of 18%. So you know what's going to happen is, and then we go to the second highest technology. This portfolio is way under the NASDAQ 100, right? It's at 18.6 versus 51. So it's almost like these two sectors are swapped. And what's going to happen in recommendations is it's going to ask you to increase certain categories by these dollar amounts, and it's going to make recommendations based on getting you more aligned with that index, with that NASDAQ 100 index. So for example, if I click increase growth, it wants me to increase my growth category by $38,000. Then I click these where it says adjust holdings. I have two areas that I can select from in terms of risk level. One is above average risk or average risk, and the other is above average risk. So all I do is click average risk, and up will pop all of these stocks. And what we've done here is we've so if it's on the NASDAQ, on the index, we've put this up top here in these recommendations, and we're only showing you 4 or 5 or 5 star rated stocks. The rating system is our own internal system that we use to evaluate companies based on their financials, fundamentals, and technical indicators. We've also thrown a fourth one in, which is the financial health indicator. So what you would do here is if this company, Diamondback Energy, resonates with you, or you think, okay, this would be a good addition to my portfolio, all you do is click toggle the portfolio button, and then you scroll up back to Portfolio Assistant, and then to your portfolio, and you'll find this stock that we just added to our portfolio here. And then you get to put your cost basis information, just got to keep scrolling, cost basis information in, and purchase price. So here we go. There we go. That was it, right? Diamondback Energy. We are going to click cost basis and stock alerts. And then all you do is click cost basis. And we have up here an informational warning for you, for informational purposes only, to buy and sell stocks, please do so via your online trading account. So when you add a company here into your portfolio section, it doesn't mean you bought it. It just means that you are anticipating buying it, or you already have on your trading platform, and now you're just making a notation here. So let's say I'm going to buy 100 shares and I'm buying it right now at 137.75, and I'll click save, and it will show my current investment of 100 shares at 137.75. And then I scroll back to the top, go back to Portfolio Assistant, and it will show in the growth category. Now I've got that Diamondback Energy Company here, as well as the portfolio shows it did have Maximum Power in it already. And it will keep track of that for you. So if you're ever at a point where you're having to make some changes and you're wondering, what do I change? What do I sell? What do I do? Always come to Portfolio Assistant, go back to Overview, and it will show you, like, for example, if we need to decrease a section, we're going to decrease the base. And if you're wondering, well, what do I do? Like, I don't know what to sell. This will tell you. It will give you the recommendations in terms of what to decrease. And it's got them here in the yellow part. So you can see decrease. It recommends selling Apple. It recommends selling Array. So it's going to show all that, and it recommends keeping NTRA, so Natera Inc. All of this is based on our ranking system within the platform. So it will give you clear indication what to keep, what to sell, or you can just go down here and look at the recommendations, right? It's showing this Vanguard ETF. It's saying reduce that, sell all shares, sell all shares of Apple. So it's giving clear guidance, right here, reduce shares, and then it will give clear guidance in terms of what to buy. So we've done a lot of work on this in terms of helping you navigate, how to manage your portfolio, what to liquidate, how to tighten up the quality of your portfolio so that you're not all over the place with your holdings. It's easy to do, right? It's easy to have a bunch of different stocks and different sectors, categories. So hopefully this will help you feel comfortable making these decisions, and easy to find the recommendations if you just scroll down to the holdings as well. So you just stay for a well-rounded portfolio. Consider these steps. Just kind of stay in these areas, clicking through. So obviously the base, they wanted a big decrease, too much in the base and not enough in the growth and Excel categories, and also decreasing cash. So you would by looking at this recommendation, you would decrease the base by 44,152. And I already went through which stocks to sell. You would lower cash by 11,030. So it's telling you got too much money sitting in cash right now, put some to work. And decrease your base. So this adds up to $55,200 and some odd dollars. And this is where you would deploy that money in the growth section and in the Excel, adding $26,000 to the Excel category and $29,000 to the growth. So please take a look at this, spend some time in this section. This is really where the rubber meets the road in terms of our software, what we recommend you to do. And this is our, this is really our big indicator of how to best use the software is in this area here, this Portfolio Assistant. As you work through this, if you have any questions, comments, as usual, please, you can email us, go to help and support, tech support, send this email, write out the email, however long you want it to be. All of our support tickets are monitored and responded to within a very quick period of time. So that's one way to do it, and probably the most effective way, because our technical team gets these first, and if they have questions, then they float it to me, and we'll certainly get back to you. So those are the changes I wanted to show you in our Portfolio Assistant. I hope you find this helpful, and have a fantastic week. And once again, if you have questions for me, go to the homepage. You can type them here, join live stream, and type them in. Our clock is off a little bit. We're on Pacific time. We're going to change that today, believe me. You can click join live stream, type your question in, or do so through our stock forum. Feel free to ask a question here, and I am certainly happy to answer it for you. Have a fantastic trading week. We'll see what this week brings, and I'll see you next Monday. Bye for now.